Canada's inflation accelerated by more than expected as a federal tax holiday at the end of 2024 pushed yearly price comparisons higher, offsetting falling gasoline costs. Let's get more from Dominique Lapointe, Director of Macro Strategy with Manulife Investment Management. Thanks for joining us. It's good to have you.
Good morning.
2.4%. What do you make of these numbers? That's higher than what most economists were predicting.
Yeah, so like you just said, it's harder to get the clear signal from this morning report because of the falling off of last year GST rebate on food items or on consumer products item. However, what we observed since the third quarter of last year, we think continues, which is that we have ramp up food inflation in Canada, now at above 6%, which is worrisome. That is offset by a downward trend in gas prices. Gas prices are lower than a year ago, but also shelter prices, which are moderating. So, for instance, mortgage interest costs are inflation is lower, so people are refinancing their house at a slightly lower rate than last year. And home prices, too, when you buy new homes, in some markets, aggregating up to the national level, are moderating, which has also a dampening impact on overall inflation. So from 2.2 to 2.4%, again, it's hard to get the clear signal, but nothing in that report is very worrisome that we are beginning to see inflation that is too hot.
Okay, that was what I was going to ask you, so that's good to know on that point. You also noted a surprising uptick of 35% month-over-month spike in air transportation prices. Can you dig a little further into that? Why was that so surprising to you? I mean, 35% is quite a bit.
Yes, it's one of the strongest month-over-month growth over many years. So to be clear, airfare prices on a month-over-month basis are very volatile. So sometimes they could go down by 10, 15% at aggregating up to the national level, and sometimes they go up by a lot. Usually during the holiday period, they do go up with people traveling for Christmas and New Year. And this time around, it did more than a year ago. We're not sure, but we do know that for some segment of traveling to the U.S., airlines did reduce a little bit of their capacity, so there might have been a supply issue there. Or it would be the other way around, where people would decide to fly to other destination instead of the U.S. with limited capacity. And StatsCan doesn't say, but overall, it's normal that we can see a spike in December. It's just this year was pretty high.
Okay, that's interesting to note. I mean, going back to the main points here, which is obviously food prices at restaurants and groceries, that went up. Gasoline prices helped to kind of flatten things out a little bit. Gasoline prices were lower. Given the fact that we're seeing an oversupply of oil, do you kind of expect gasoline prices to continue to I guess it's hard to predict, but over the next couple of months continue to drop and help to offset what we're seeing in terms of grocery prices?
Yes, slightly. We do expect oil prices to moderate even more this year, and that is a combination of slightly stronger supply, and I'm leaving out any geopolitical events right now when I'm saying that, just OPEC, non-OPEC plus standard forecasts, and at the same time offset by stable demand. Meaning that there isn't a lot of pressure on oil prices globally, which should also keep a lid on gas prices in Canada.
Okay, looking at 2.4%, you say that's no reason to panic. You don't believe the Bank of Canada will change its decision and cut interest rates anymore, at least for the start of this year. Is that correct?
Exactly. So going back to the overall inflation number, you look at other categories as floating, health and personal care, recreation items. Those are categories where we had issues with inflation from 2021 to even say middle of 2024. We don't see a lot of inflation there. The Bank of Canada notices that. At the same time, what it focuses on, the central bank, what it's focusing on are the core measure. And those measures this morning actually went down a little bit. They're still above 2%, even above 2.5%. but they've moderated. And for the Bank of Canada, that's a good sign. It shows that at the aggregate level in the economy, there isn't a lot of price pressure. And I'll even tie it back to the Business Outlook survey that was also published 30 minutes ago. It's showing that on net, there's more firms thinking that their input prices are going up than their output prices are going up, meaning pricing power for businesses in Canada is limited.
And so you expect that to maybe hurt hiring in the future?
It already does. So in terms of general hiring in the economy, we have some, at best, stabilization. I think it's a good news that we don't see at the national level more layoff like we saw early in the year. But you look at other metrics such as hiring intention by small and large businesses, it's limited. And actual vacancies posted are very low. So yes, the inability to pass on prices is limiting hiring at the same time as the sales volume for many firms that is lower is limiting hiring.
Okay, so interesting. Thanks so much for joining us to break down these numbers. I appreciate your time.